Just thought I'd put this little video together for you. I think it's quite interesting. I'm just actually filming this from my camera into my notebook, and I thought it might be useful for you. If I can just keep it still. This is just a little trading checklist for you to go through before you take a trade. And it's pretty simple, really. But if you can tick each one of these off, put them in a notebook somewhere or on your computer, and just tick these off before you take any trade. And if you've got enough ticks in the boxes next to these things, it's bound to be a good probability, lower risk trade than if you didn't do it. So it's useful to do so. So you can see I've just called it a trading checklist. And I could have done this on my computer, I suppose, and typed it out neatly, but I thought I'll just take a video of my own little book of notes here. So, trading checklists. First of all, stochastics. And this is not in any particular order. Remember, I place more emphasis on the last few things on this list than the first few things. The first few meaning the stochastics, the Bollinger Band, the moving average. Those are just little bits that add to the probability and the strength of the other stuff further down on the list. But let's just go through them, bearing that in mind. Stochastics, are they overbought or oversold? If we're not overbought or oversold on the stochastics, so a reduced probability trade, and it's best to just wait until that condition does occur. That's number one, very simple. Bollinger Bands, are we near the top or the bottom Bollinger Band? If we are, wait for the price to get drawn towards those Bollinger Bands. They're called price magnets, and the price will often move towards the Bollinger Band before it changes direction. So look to see where the Bollinger Bands are on your chart in comparison to where the price is. And if you're somewhere near the Bollinger Bands, within, let's say, 20, 30, 40 pips, then don't take the trade. Wait for the price to move towards the Bollinger Band before considering a trade. Moving average. Are we above or below the 200-period simple moving average? If we're below, predominantly you should be looking to trade short. If we're above, predominantly you should be looking to trade long. Simple as that. And also look at the moving average also as a potential support or resistance line. If we're very close to the moving average, it may act in conjunction with the other stuff on this page. It may act as a resistance or a support level, and often the price is drawn towards the moving average. So if we're very close to it, or again, similar to the Bollinger Bands, within 20 to 40, maybe 50 pips, rather wait to see if the price reaches that moving average. And if we're below it, predominantly look to sell. If we're above it, predominantly look to buy. Fibonacci's, are we near the 38.2, the 61.8, the 78.6, or the 50% Fibonacci? Those are price magnets as well. They act as excellent, when I say price magnet, I mean a place that the price is naturally drawn to and will head towards those levels. And they also act as support and resistance levels. Are we near a Fibonacci? Is there any chance of getting near one? If we are, those are the areas that you should be watching. If we're nowhere near, if we're in between Fibonacci's, nowhere near one above us or one below us, it's probably not worthwhile. Horizontal lines. Those are the support and resistance lines, the horizontal lines across the chart. Are we near one of those? Do those horizontal lines coincide with the Fibonacci levels, a moving average, Bollinger Band, etc.? Remember, we're looking for all of these things to sort of combine together to form 2 or 3 or 4 or more of these things happening in the same place. If they do, it increases the probability of having a winning trade significantly. Trend lines, same thing. Do we have a trend line above or below us? Is that trend line near a horizontal line, a Fibonacci line, moving average, Bollinger Band, etc., all of that sort of thing? If you get Fibonacci, a horizontal line, and a trend line all in the same place, like we do actually on Sunday night, the 27th of February, which is 2022, which is when I'm recording this video, that's often a fantastic area to trade from. That's the trade that we'll be looking to take at the beginning of this week, because we have a horizontal line, a Fibonacci, a trend line, and overbought stochastics, and a moving average, all in the same place and they'll all end up in a few hours' time, spot on top of each other. Then, once you've got all that and you think, yes, there's a good trade, I've actually forgotten to put one thing on this list, probably the most important thing, and that is the price action. Look for candles that are reversal candles. Those would be, for example, if we're going to sell, we'd be looking for bearish engulfing candles, dark cloud cover, dojis, one up, one down, spike high, all that sort of thing. We're looking for one of those reversal candles, a price action indication that we should take a trade. Very, very important. And then after all of that, if we've decided that there's a trade on, we need to look at the target and the stop loss involved. Ideally, we want the target to be double the amount in pips, or, well, it makes no difference whether it's pips or money or percentage, but the target should be as close to double the stop loss or better as possible. So keep an eye. If you need a 30 pip stop loss, you're going to need at least a 60 pip target, and so on. Risk reward, same sort of thing. I've just mentioned that. Target should be at least or very close to, and even better if it's more, than double the stop loss. And then percentage risk. You don't want to be risking more than 2% per trade, so keep an eye on how much you'll be risking on the trade, and what determines that is your stop loss and your position size, the leverage that you're using. If you're using a 30 pip stop loss and a 5-to-1 leverage, that's 1.5%. If you're using a 6-to-1 leverage with a 30 pip stop loss, that's 1.8%. You don't want to go above the 2% level. Once you've got all of those things in place, you've got the stocks, the Bollinger Band, moving average, Fibonacci, horizontal lines, trend lines, targets, stop loss, risk reward, percentage risk, and price action. Very important. I'm going to underline that with my voice. Price action. I should have written it down, but I didn't. If you've got all of those things in place, that means you're a for a way to take a good, high probability, low risk, and fantastic trade. And that's what we'll be looking for in a few hours' time from now, as I'm recording this video. Sunday night, 27th of February 2022, waiting for the Asian session. All right, take care. I hope you found that useful.